Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 7th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. I zoomed out here a little bit just to show the wider key range that we're dealing with right now. You'll notice that you have the key range high here, which comes across right across these highs right there. You have the key range low here. And then you have the midpoint of the key range right there. I guess I could draw that a little better there. But what we were looking for initially was, can we take out that December 2018 low? That would be the first spot to identify for rejection and perhaps a bounce back toward that midpoint, which we've now done, and we've now surpassed here in pre-market trading with a huge blast off late yesterday afternoon and also a continuation in overnight trading here in pre-market trading. However, we're coming up into a zone that could provide quite a bit of overhead resistance. Here's 2800 right here. You can see it was resistance, then support, even a little bit lower, right in around the zone that we're at right now, 2750 or so. That zone right there is providing some overhead resistance. You can see right in this area here and here, and that was the change of bias there. Now we're coming into it again. Is this an area where the market's going to let off steam and throw off a tail? Or are we going to pull back a little bit and form another higher low and try to push another leg higher through 2800? Right now, again, while the market has been significant in its bounce from these lows back toward the 2700 level, remember the bear market bounces can be more aggressive than bull market bounces. You can see how aggressive this bounce has been over the last couple of weeks, and again, that's way more than what we saw just in a 2 or 3 or 4 month period here right before the drop. So again, these can be very aggressive, but it can suck people in here at these higher prices right before we get a major shakeout phase back toward the recent lows or perhaps through those lows. So again, just know that we could still see a return back toward these lows for a retest at some point down the way. It may not be now, but again, if price can't get above 2800 at some point here, we may be looking at a pushback, and that could be our range at some point down the road. So again, just continue to be cautious here at these highs. While the market has been strong, look to buy dips until market structure is violated. Again, any failure here to hold the previous session high could turn into quite a pullback here ahead, while staying above that high suggests 2800 could be ahead. So continue to watch those key levels. If we take a look here at the NQ, very similar price action. You have this range that's broken to the upside now. You have a nice continuation, and we're now retesting 8250, 8280, 8270 right there in that zone from below. And that's going to be important here because again, it's one of those key levels there that the market has used kind of as support and now resistance. And again, if the market can't get through that zone, it's going to be very interesting. So right here was a change of bias and continuation. The first pullback got us to that zone and bounce. Then we went through it, retest at it and drop, and now we're back at it. So again, this could be a spot where we either pull back and try to burst through that zone, or we could leave behind quite a tail here if we do pull back and not bounce at all. So we'll continue to watch that zone. But if the market can get above this 8300 zone, that opens up a little bit more upside. But at what point do we see kind of a shakeout phase down the road? So continue to keep that in mind. If we take a look here at crude oil, this one is up 1.5% right now. It's in a very narrow range of just 40% of average daily range, with a range of $1.19, 119 ticks. It's been averaging nearly $3 of range on a 10-day basis, and on a 5-day basis it's 3.75 points of range. This is a double inside day that we have. We had 2 major blast off days there after 3 digestive days, absorption down here. Now we're having 2 very compressed days here where we're building energy for the next move, perhaps up, given the move we've had. Again, one thing I want to caution is that we are inside the bearish trigger zone here, the bearish Pima trigger zone, which usually leads to another round of weakness, as it did here, as it did there. Now that we're inside again, but holding, and you start to see the 8 period rising, again, it could do like what the ES and the NQ have done and taken it bid and try another leg up. So this is going to be very important. If we do break this thing down and break below the 8-period average, if we reject that level, that could be a failed low that leads to another bounce into the next key level above, and that's 3250. All right, let's take a look now at gold futures. Gold has been very, very bullish, but may be throwing off another tail at the high. 1700 price closed above that level for the first time in 6 or 7 years. We have price push through the key range high here and is now holding with a large rejection tail that is developing. If you look at the 60-minute time frame, we kind of have, the rejection, then you have a lower high, and now we're sitting right at this point here that, and this is after a big move up, that if it rejects here with a lower high, we may see a broader tail develop and maybe a break lower. So again, if this thing cannot continue to hold 1700, we may see a return back towards 1628. So this is a key level to watch here. We're going to continue to watch this rejection day as it continues to develop. Again, still a lot of time in the day left, so this could turn into a bullish day if it starts to reclaim today's midpoint of 1715.80. All right, let's take a look. Lastly, oh, that's it. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.